Hello everybody. In this time we are talking about cost classification. Cost classification is the process of categorizing your expenses to allow for easy analysis. Classifications are used for management reporting, financial reporting, investor communications, forecasting, etc. Cost classifications are a component of financial analysis and forecasting, which is what really validates the strategic story holistically. When speaking with investors, cost classification is an essential way to validate your strategic story with financial data. Investors need an easy way to understand how you're spending money, and classifications on the income statement on the first place they'll go. You can often tell what stage a company is in by how they classify costs on their income statement. You can classify costs as a percentage of total spending or as a percentage of revenue. Hopefully, as you grow, your expenses will make up less than 100% of your revenue, meaning you've reached the all important profitability. Cost classification refers to the process of categorizing costs according to their nature or function within a business. This helps businesses to better understand their costs and make informed decisions about pricing, production, and profitability. There are several ways to classify costs, including the first, fixed and variable costs. Fixed costs are costs that do not change with changes in production levels, such as rent or insurance premiums. Variable costs are costs that change with changes in production levels, such as raw materials or direct labor. Second, period costs. Period costs are costs that are not directly related to the production of a specific product or service, such as advertising or administrative expenses. And then the third, direct and indirect costs. Direct costs are costs that can be directly attributed to specific product or service, such as the cost of raw materials or direct labor. Indirect costs are costs that cannot be directly attributed to a specific product or service, such as rent or overhead expenses. Fourth, product costs. Product costs are costs that are directly related to the production of a specific product or service, such as direct materials or direct labor. And fifth, controllability. About controllable and uncontrollable costs. Controllable costs are costs that can be influenced or controlled by management, such as direct labor costs or material costs. And uncontrollable costs are costs that cannot be influenced or controlled by management, such as taxes or interest expenses. And then, what are the methods of cost classification? Every company needs unique costing strategies to demonstrate its expenses. The first, job costing. Typically, all firms have a business rationale that allows them to manage the flow of their work process. For example, they allocate a certain cost to a particular job or assignment. The increase in profit depends on the accurate application of this strategy. A prominent characteristic of job costing is that it applies to every particular order costing irrespective of the duration it needs to complete the job. Generally, job costing is employable for works that take a shorter period to complete. And the second, operating costing. Another method of cost classification is operating costing. This is an ideal strategy for service sectors. These companies use this method to evaluate the cost of services. However, to employ this method, companies should ensure certain formalities. Firstly, all of our services must be uniform, and secondly, they cannot be any of those specialized services. Third, contract costing. This method only applies if there is any involvement of a contract between a client and a contractor. However, employing this strategy benefits the contractee as it helps track all the expenses. Fourth, process costing. That is another popular strategy of costing. Here, numerous products are manufactured at the same time, and all of them are similar. Companies use this strategy to know the production cost of single units. To determine this, first they find the production cost of every process and then divide it by the manufactured units, those who manufacture salt, sugar, other chemical or edible oil use this strategy. And fifth, batch costing. Batch costing is applicable when the production of goods does not meet the demand. In such cases, they replicate the products. Nevertheless, the strategy remains persistent and it is done in batches. These batches contain uniform products that may fulfill one order or meet the predetermined quantity requirements. I think it is enough for this session, and thanks for watching. Don't forget give this channel with your like, comment, subscribe and share. Thank you.